Tourne, ça tourne, ça tourne, ça tourne. Ouais. Hello everyone, welcome to episode 9 of Office Hours with yours truly. Today I have something really special. We are going to revisit a blog post that I wrote many moons ago, but I think is still applicable even today. So we're going to go over the 10 most common reasons why fintech startups fail. Are you ready? Let's go! Indeed, licensing. That's very important, right? We live in an industry where you, fintech startups, are going to sell to licensed entities, or you might have a need for a license for the stuff that you're selling, either a service, a product, or a platform. You have to think about licensing. Even though you may not need licensing yourself, because you may think that you're a pure tech company, your customers, your clients are going to need, for you to think about their own licensing. If you're a B2B or B2B2C business, if you're direct to consumer, chances are that you're going to be impacted by licensing. You have to think about it. Well, yeah, indeed, strategic investors. Who doesn't want strategic investors, right? It's great money. On top of that, you might have a commercial agreement with them. Which fintech startup wouldn't want to have that? Well, that comes in with strings attached, because these strategic investors, right? There are banks, there are insurance companies, there are capital markets actors, there are asset managers. They have their regulators, they have their legislators, they have their license to protect. And it's very difficult to get an investment from them. So you have to think long and hard about the implications. It's going to take longer time maybe. It's going to come with lots of strings attached, as opposed to other verticals, other industries, where those strategic investors are not beholden to the same issues of licensing that a bank is. So think about that. 3. Compliance, yeah, read it, okay. Most people in tech don't believe in compliance, don't think compliance is an issue, don't even think that it applies to them. Chances are it is going to apply to you. Much like with licensing, compliance is an is in the financial services industry when someone is handling money of a third party, and you have to think long and hard about that. Which are the laws and the regulations that are compliance related are going to apply to you, and they may impact the way that you sell, they may impact the way that you build the product, the way that you deliver the product, the way that you have cybersecurity around the product, the way that you protect the data of your customers, and so on and so forth. Comply, comply, comply. That's one of the reasons why if you don't, you may fail. 4. Duh. Of course. Choose a fintech VC investor, that is specialized and knows what they're doing. Look at yours truly, you have to choose the right VC. Any VC that invests in the financial technology and does not have the experience and the long years of working in the financial services industry, may not be the right partner for you, fintech startup. There's a rule book to how to grow a startup. There are do's, there are don'ts. Indeed, follow those rules and try to go and head-to-head with like the best practices out there. But over and above that, a fintech startup that either sells to consumers or sells to businesses in the financial industry, right, is regulated, and I use the word as a pun, in a different way than a startup in deep tech or in another industry. You have to understand that it's very difficult to move really fast and break things. You have to understand that it takes time to nab a client or a customer if you're a B2B business. You have to understand that those issues that we discussed with the previous points in terms of licensing, in terms of compliance, and so on and so forth, apply to you and apply to how you're getting traction, how you're growing the business. You have to tend your business with care and you have to take time. In other words, that rule book where you're going to grow from 0 to 1 in like 2 seconds probably doesn't apply. 6. Don't compete on cost. Simple. There are many incumbents, there are many bigger fish out there in the pond in which you're fishing that have a lot of capital, that have balance sheets. If you're doing lending, for example, these people, these groups will crush you on cost alone. They can subsidize and cross-subsidize till their heart's content. Be differentiated, come up with a solution that solves a problem that is a friction within the industry, and don't compete on price. Obviously, that applies to all kinds of industries in the innovation world and in various types of technologies, but even more so in financial services and in fintech. 7. Intellectual property. I don't think that IP is defensible in the financial services industry because you can reverse engineer IP. A bank can, a large insurance company can, an asset manager can. So be careful if that is one of your selling points, selling to your investors or selling to your clients, because it might not be that defensible. I love this one. Payments is easy. No, payments is not easy. It's very easy to get into payments. It's very difficult to succeed in payments. Payments is extremely difficult. It's a fragmented industry. There are B2B payments. There are direct-to-consumer payments. There are retail payments. There are push payments. There are pull payments, and so on and so forth. Know the payment sector that you're in and specialize in it. You know, if you do so, then you'll succeed. Look at Stripe, for example, but don't think that payments is easy and you're going to succeed just because it is easy. Legal aspects. Well, it's kind of like a pendant of like compliance, AML, KYC rules, licensing, regulation, and so on and so forth. You're in a business that is heavily legislated too. There's a lot of laws to protect the money of investors, the money of savers, the money of lenders, and so on and so forth. Lots of laws to protect people that take products in the insurance field, and so on and so forth. So not only do you have to be good at compliance and good at regulation and understand how they impact you, but you have to understand all the laws that apply to the product or the service that you're selling from a fintech perspective. That's a must. Lastly, business cycles. Duh, it's trivial, right? However, it's even more important in the financial services industries. Banks go through booms and busts. They have credit cycles. They're impacted at the macro level and the micro level. Insurance companies, the same. Payments companies, the same. Asset managers, the same. And so chances are that your fintech company will be even more impacted by the business cycle, the credit cycle, that it is in, because they're selling to people and they're selling to companies that are very much impacted themselves. And if you are also a direct-to-consumer fintech startup, well, you know, the people that you're selling to are impacted. Sometimes they're in a good cycle and households have a lot of capacity to purchase the product or the service that you have, and other times they're not. So that's also very important. And that's a wrap. Ladies and gentlemen, boys and girls, people from all around the world, this is a call to action. We need you to get onto the Loft's YouTube channel or to contact the Loft in any way, shape or form that you see fit, even with the homing pigeons, for example. Tell them which questions you would like me to answer for the next episode, and we need you and we need your input for episode 10. So bring on the questions so I can answer them as soon as possible. Bye-bye.